meet people and start to get to know them and understand, are you aligned? Are you not aligned? Do you click? And then what is their experience? And, I love when you talk about how long you know someone, because I think that's pretty important, to know the people that you're getting in business with.
If you're not conscious about your investment strategy, you won't end up where you want to be, not financially or as a human. On this show, we interview highly successful investors and share how they overcame limitations to become unstoppable forces of success. If you're ready to learn what it is to be a conscious investor so you can end up where you want, keep listening.
Welcome back, Conscious Investor. Always happy to have you here. And guess what? I am joined by a friend of mine, Michelle. But before we jump in, you know that there are a few things I always like to just bring you up to speed on, because when this comes out, you will still have time to grab some tickets to join me at Dealmaker Live. It's taking place in Dallas, Texas. It's Michael Blanc's event. I've gone the last couple of years because the one year I missed it before the pandemic was a magical year for a lot of friends of mine. And I have not missed it ever since. And I have made so many alliances at that specific event because the type of people that are drawn there. And as you know, I believe in breaking bread with people, meeting people in person. And, you might not necessarily form a partnership instantly right there, because you, conscious investor, understand I have to know you for a year. I want to know you. I want to see your track record. Like, our company doesn't just jump in, but the best way to get to know people is to go put yourself in the swimming pool. Like, go there, swim with everybody, in the sea of, this event, so that you can actually mix and mingle and meet people that you might want to carry on that conversation for a period of time, before collaborating. So Dealmaker Live is coming up, and you don't want to miss it. It's going to be amazing. Also, my gosh, you guys are amazing. And I'm always grateful for all of the support that you give me. So here's the thing. Right now, I'm really wanting to reach more people, and I just cannot do that without your support. So there are a couple of ways. If you're enjoying this show, I would absolutely just be so grateful if you would share the show, The Conscious Investor, with someone that you care about. Maybe it's a mindset episode. Maybe it is a investing episode. Spoiler, remember episodes 365, though anything that is 365 will always be supporting skills of investing. And so those are really powerful skills. Maybe you're trying to introduce someone to syndication. I break it down. What is syndication? What questions should you be asking, general partners before you jump into a deal? So lots of good information out there. So please share away. And if you haven't already, please leave a rating and review. It makes a huge difference. All right. Let's dive into this episode with Michelle, because she's a passive investor. She's also an active investor. And I love it when there's that combination of those two, because we can talk from both sides of things. But today we're really focusing on this passive investing experience that she's had. She's also sold businesses and, done owner carry. So she has a lot of different, diverse experience with investing in real estate and businesses and such. And so anyhow, it's going to be a great conversation. And I know it's going to support you in expanding your thinking and your horizons. Even if you're not going to do some owner carry something, this is just going to give you an idea. Elaborate your thinking on all things. Michelle, welcome to The Conscious Investor.
Thank you so much. This is such an honor and a privilege, Julie, because I listen to you every week. And so to have the opportunity to be on your podcast is, it's a privilege. Thank you.
Oh, it's a joy. Michelle, Conscious Investor, you don't know, but Michelle and I have had conversations. We're part of the same mastermind group. And so we've been able to get to know each other. And, once you find a group that you align with, it's great to just really dig into those relationships. So Michelle, it's been great getting to know you. And I was absolutely shocked at, just all of the experiences that you've had. And so because you listen, I don't typically say, hey, give us a little history here, but you've had a lot of experience in a lot of different things. So can you just share with the Conscious Investor a little bit about, what you've done?
I will be quick. I've been a W-2 off and on for my entire career, more on than off. But in the meantime, I also purchased businesses, some with my husband, some on my own. And we always did it together, but some I helped run, others he ran, things like that. But so we've had cafes, we've had a hospitality recruiting company. We've even had an aftermarket automotive performance parts company.
Wow. And
that was a little crazy. He loved it. It was not my thing. And so over time, and then we've also owned real estate. We've done single family investing, single family rentals, short-term rentals, and now apartment syndication. So we've done a lot of different things. Of course, I also have brokerage accounts. I'm investing in a startup company of someone that I met when I had my cafes and feel really comfortable with. That's a very risky investment to invest in a startup, but I felt good about, the person starting it and how she's building it. And so the first it's a restaurant and or it's a chain, and the first one will open this summer. So that's exciting to see that investment come, to fruition.
That is really exciting. And yeah, you're right. The restaurant industry and the hospitality space definitely has its ups and its downs. And it's like, okay, how's it going to go? I love it. So let me ask you this. When you think about all this investing that you've done and the risk threshold, let's just get a little risk profile, because I don't want to make any assumptions here, but what would you say, how much risk? What's your threshold on risk? Or risk tolerance?
I feel like I'm pretty conservative. I'm a little debt adverse. I follow Dave Ramsey. I'm a big Dave Ramsey fan. I've paid off all my consumer debt. I've even paid off my house. And, so I feel like I'm conservative in terms of when I look at something, I really dive into the numbers. In my W-2, I'm looking at numbers all the time. And so I feel like I take calculated risks, I guess. Some are obviously more risky than others, and I have to be willing, especially in, like the startup, I had to be willing to lose the money that I put in. And it was a good chunk of change, but I feel confident enough that this will be a successful concept. But if it's not going to change my world that, I lose that investment. So that's the way I look at my risk tolerance, I guess.
So, Michelle, you have all these different experiences where you've bought these businesses, you've sold them, you've done owner carry, you're investing in this startup. How do you go from, and the startup is more current time, but that's more future forward, right? How do you go from buying businesses to discovering passive investing in apartments and real estate?
Well, since I became an accidental investor in real estate when I couldn't sell a house and I ended up renting it out. And I liked the fact, now that wasn't completely passive, but I did have somebody managing it because I actually moved out of state. So I couldn't be hands-on completely in that first time. And then I ended up seeing, the returns and said, oh, this is not too difficult. And, the money is good. And so that was really probably my first time, other than, of course, IRAs, 401ks, my brokerage account. Those are all things that obviously are passive to a large degree. I have, a financial advisor that helps with that. I certainly want to understand what it's going into, and I direct, again, kind of my risk tolerance and where I want things to be placed, but I'm certainly not doing the trading. And so, to see that type of income come in without having to work the crazy amount of hours that I work, to generate that income, or even, with the restaurants that we owned, the hospitality company I owned, that's very hands-on. It's a ton of work. It's a ton of hours, and it's a ton of headache and stress. So it was such a nice relief to see I can have, I guess sometimes I call it mailbox money. I have this money coming in and I don't have to put a lot of effort into that. I already did put in the effort, right? To earn the income, to put in the investment. And then it continues to grow and build that wealth for my family. And so that's, I think that was just from my early 401k type experience, and then seeing this real estate and the ability to earn an income there is what kept me moving forward. And I think the apartment, now that I'm in the apartment syndication, what I find so fun about that is you're doing deals with people that you meet, that you know what their business plan is. But especially when I'm a limited partner, I don't have to do any of the work. I just get to, experience the returns, but I still get to be updated on what's happening and feel good about, that I made the right decision, or hopefully I don't get into a position where I didn't. So
yeah, I love this. Okay, that touches on a couple of things, as I'm active and I speak with our limited partners, on a regular basis. I like to understand what's going on. And I was speaking with one of our limited partners about one of our current deals. And it was interesting because getting his perspective, he's involved in multiple syndications. And I always like to know, and I happen to know, like he and I both know all the deals that he's in and who they are. They're all like friends of mine. And oftentimes that happens, actually. Conscious Investor, there are several of you that know that if I don't have a deal, I will send you to a friend that does have an offering if you need to deploy capital right away and everything. And so that has happened, and it's been exciting. All that to say, it was interesting. Let me couch this back up a little bit. It was interesting. I said, hey, I always want to serve and support you in the best way possible. I said, and you're involved in multiple syndications. How is our communication? Are you getting all the information that you feel is beneficial to you? Because I'm also a limited partner. And for a while, the communication from the group that we invested with was like scant. And I'm like, I have no idea what's going on. And so something I'm a little sensitive to, but it was great. We got some like super great feedback. He's like, actually, I get the most from, your team. I'm like, is that for good, for better or for worse? It was a for better thing, but what are you looking this is a very personal question, even for me, right? Like, what are you looking for? And the conscious investor, you're going to benefit. When you look at what you're involved with, what is the type of communication that you receive, and how do you feel that supports you? Do you like a lot of communication? Do you want little? What is it you want to know and you think that passive investors should know in those investor updates?
Yeah, that's such a great question. And I will say the first deal that I got involved with, the communication initially was almost non-existent. And I was super frustrated because that was something that really appealed to me about the syndication. I've been in REITs before. I actually still have one. I still have a REIT, but that I'm invested in, but I get no information on that whatsoever. I have no idea what they're doing. I just get the dividends that I pay ordinary income on. And so it is not a great deal for me. And that was one of the benefits that I thought I would get from apartment syndication. So it's improved since the beginning. And basically I kept saying, at least to the person that brought me in, who I knew, and I said, hey, I need more. If I'm not going to get it from the lead sponsor, I need it from you. I need to know what's going on. I need to know what improvements that you're doing. That's why I got in, is so that I could still know what's going on, but I don't have to, pick up the phone and deal with the tenants and deal with the asset and all of those things. So that's improved. And, then in other cases, it's like monthly clockwork. I'm getting, here's what's going on. Here's what we spent money on. Here's the challenges we had, which is really good to understand. And then, and here's the successes that we've had. And so I really appreciate that. And that's what I was personally looking for. And as I become more active in deals, then that was a great lesson for me to say, this is what, I think people want, to understand, have enough information. And then if they don't, they can say, I don't need that. Right. But I think it's better to over communicate than under, at least at the beginning, and make sure what people want.
This actually points to why I believe every active investor should be a passive investor as well, because you really have, just myself being a limited partner, passive investor allows me to, have those feelings, they're there. I want to know. I mean, we just went through a refi on a passive investment and such. Like, I want to know, how that capital's being returned to us, which we won't get into the nuances of that today, conscious investor. But, it's understanding when you actually have money invested as a passive investor and you have no voice, no voting rights, and you're just at the whims and mercies. It's really not whims and mercies. We know that. But I mean, it feels that way. And so you don't know that unless you are on both sides of things. And so it really keeps you sensitive to that passive investor experience. Is like, I don't want to feel like that. And it's really important. I want to circle back to REITs real fast, just to clarify for you, conscious investor. If you are new to this whole concept of, apartment syndication or syndicating, we can syndicate anything. I always say, we can syndicate a pizza purchase, but REITs are not a part of a syndication, and they are not a passive investment in the sense of, in the same way that you are passively investing in a syndication. So when you invest in a syndication, you are actually part of the ownership of the real, tangible, physical real estate, the building, the ground, everything that is involved with it. With a REIT, it's a paper asset, no different than stocks, and it is traded in that way. And you do not have all the same benefits involved, the depreciation and such. And so, there is a difference. And oftentimes, I know when I was at the beginning of my journey, I really didn't know the difference. I just want to clarify. Michelle wasn't saying that they were the same, but I just want to make sure for you, conscious investor, that you're really clear. Oh, wait, if I'm involved in REITs, that's not the same as being involved in a syndication where I'm an actual owner of the real physical building. So that is really helpful, Michelle. I really love that, like what you're looking for in the communication and everything. Now, when you are thinking about, you said, the people involved in deals, like, how do you go about even finding the deals, choosing the deals? That's a process for anybody. What was that process like for you?
Well, it was important that I knew the person that was talking to me about the deal. And the first time I got in, I wasn't familiar with the lead investor. Or the lead sponsor. I did some research on them to see what other deals they have done. I did, some research on that. I will say I probably got in a little naively at on my first one. I was excited about it. I knew, the person that was talking to me about it. And they were also part of, the same ecosystem that we're a part of, in with other investors. And so I felt good about all of that. And then the numbers, of course, looked great. And I asked them, I really want to understand the thought and, where these numbers came from. And because I knew the person that was getting me involved, I felt like I had a little bit of, behind the scenes, information in terms of how they, where these numbers came from, how did they come up with them? And so that I could really understand, the underwriting, the putting together what the projections, will be. And so that was, in that instance. I'm in another deal that I'm in right now. It's someone who has done a lot of deals. He's a real estate coach. He has been in this market, has gone full cycle in 4 different deals in that market and has 6 there now. And so I feel he knows the market. And he certainly knows real estate investing because he coaches for it. But, and so then it was really just a matter of looking at the numbers, and it was a loan assumption. So it was a great rate, and there's still 9 years left on it. And there was just all these things that I really liked about it. And there's always things where I think, well, I wish that were a little different, but I think the other aspects of it, I wish there was less one bedroom and more 2-bedroom, for example, in that particular deal, but it seems to have worked out. And I asked those questions before I got in, tell me a little bit about, the unit mix and why that works in this area, because I'm a little concerned about that. And so, at least I had the ability to ask someone, and just being part of these networking groups. I go to networking events. I go to, I large events, meetups, things like that. Online, I do a lot of online because I work a lot. So the online works better for me. And you just meet people and start to get to know them and understand, are you aligned? Are you not aligned? Do you click? And then what is their experience? And, I love when you talk about how long you know someone, because I think that's pretty important, to know the people that you're getting in business with.
I can't overemphasize that to you, conscious investor. Like really, so much on the limited partner side. I don't mind investing with a team that maybe I haven't known for a long period of time. But when it comes to looking at that team and evaluating that team, I want to know that they know each other. And I want to know that they know what my goals are. But I want to know that they know each other, because something is going to happen. That's the realist in me, and something will go sideways. Something is going to happen over the duration of a hold, and having a team that knows how to communicate, that has a relationship built on, respect and trust, is going to lead to a positive outcome. And we always say, and I think I don't know, let's see if you agree, but I always say, you could have the best team in the worst asset, but they will pull it through, and it's going to be powerful, and it's going to be a great asset. You could have the worst team with the best asset, and that asset's going to tank, even if it was like handed to somebody on a silver platter. So know thy team.
Yes, that makes a lot of sense. I mean, it makes a lot of logical sense. Just you have, real life experience with that. Mine is more, it's newer, right? So, but I think that knowing you're in this deal for at least 3 years, probably more like 5. It could go beyond that. It's a marriage in some cases,
Yes.
where some marriages are short. But you have to be able to work together and make decisions that are aligned, and and that are meeting the needs and the wants of your investors, or what you told them you were going to do and how you were going to do it. And so, that integrity and knowing that people are just have the same, thought process and mindset, I think is so critical. Mm-hmm. So.
Yeah, it is. And that's a life principle right there and everything. So let's transition a little bit. Let me ask you this. What are some things you wish you would have known before placing your first or second, passive investment? Some of the things that you may have learned along the way that you're like, if I would have known that, I would have done X, Y, or Z.
I think that, again, kind of with the first one, I went in a little bit, just the excitement of it. And I trusted the person that was talking to me, but I didn't look up the crime rate. I didn't look up, there were things that now I do, and I don't know if every limited partner does. And maybe it's more because I'm looking at also being active. So I might look at things a little differently than a passive, but I feel like I probably didn't ask enough questions, and I probably didn't do enough of my own research. I did a lot of numbers research, but not the asset itself. I didn't go visit it, and someone else went and visited it and decided not to invest in it that I met. And they told me why. And I went, oh, that's interesting, and so I think just knowing the questions to ask. And that's why it's so valuable to be part of, when you listen to your podcast and again, be part of these other groups where you're getting information on, here's the questions you should ask. Here's the things you should look at. And I didn't do that in my first deal. I just was excited to get in. I trusted them. The numbers look good. And so let's go. And now I do things a little differently now. So
nice. That's interesting. And, conscious investor, if you don't have the ability to hop on a plane or drive hours to visit that, this is why it's so beneficial to have a built out network. So I was looking at a potential offering in the DFW area, Dallas, Fort Worth and everything. And I happen to have friends down there. I reached out to a friend, said, hey, they're saying XYZ. I'm noticing XYZ about this. I don't have time in my decision-making process. Would you mind? And this, awesome friend, he and his wife and child drove, and they're both in real estate. So I got both perspectives on it. And sure enough, they took video for me. They were driving through the neighborhood, taking video, and it wasn't something that aligned with the type of portfolio that my company is interested in. And so it was like, that was absolutely invaluable information. So building out your network with other people who are investors who are going to know what you're looking for as well. They're going to be the absolute powerhouse assets in your life. Like they will serve and support you. And there's no strings attached. We all like to help each other out.
Yes, that's a great way to do it. And especially, if you're participating in some of these online groups, you're going to meet people all over the country. So that can be really helpful. Yeah.
Mm-hmm. Yeah. And to think so Michelle and I've gotten to know each other through a little subculture of a larger culture, and it's a little private chat thread. And so don't underestimate the power of chat threads because there are so many of us that have gotten to know each other. And one of my really close friends, that's how we met. So you never know who you're going to meet anywhere.
Yeah.
Love it. All right. As you are transitioning into the active space, what does that look like for you? And how do you feel being a passive investor is shaping you as an active investor?
Well, moving into, the active space, it's like you said earlier, it's been so helpful to be a passive investor. I know the things that I wish I would have known, or that, I now know, and the things that I, haven't liked about, the communication. And so with people that I'm talking to and inviting them into opportunities that I'm already participating in, and I'm able to share, here's the things that, I think you should, be looking at. It's a huge education process for someone who's never looked at apartment syndications before. And that's for me right now at this point in my journey, that's most of the people who I'm talking to. And so just, giving them resources and giving them, here's things to think about. And you can ask me anything, anytime. And if I don't know the answer, I will get the answer. And I can always give you my perspective, but you should do your own research and you should talk to your own experts. And I think that's helped people feel comfortable that I have nothing to sell. I just have an opportunity to share. And if it's right for you, great. And if it's not, then find what's right for you. I believe in diversification. I believe in, taking, the money that you've earned and putting it to work for you. And so if you're doing that, I'm happy for you. But I love the fact of what I'm doing, and I love to be able to share it. And so, so I think again, for me, it's gone back to communicating, being available to answer questions, being timely in your response. That was something that really frustrated me, with my first deal, is I felt like I was reaching out and not getting responses, and, the portal wasn't getting updated and my information wasn't correct. Like, it wasn't updated, and like, what is going on? So I want to make sure that doesn't happen to anybody that I work with, to the extent that I can control it,
Yes, yeah. And something might happen, and being able to be gracious and, repair that. I know, honestly, one of my investors was like, I haven't been getting updates, and this is over a period of time. And I'm like, that's weird. You should have all the updates. We send them out monthly. I went in and, full transparency, like there was a, little dot, whatever was incorrect. And so, things happen. And so having that communication, being able to respond and like make corrections quickly it broke my heart. I was like, oh my gosh. I mean, this is really important, that it's important that investors have these updates. So, yeah. It's wild. As you are, I'm mentally going down that rabbit hole right now of like, making sure that you are having, very clear systems in place so that, things like that don't happen. For us, that was a big like, whoa, how did that slip through the cracks? And so now there's going to be a new system in place where it's, hey, we need to be checking and just making sure our investors, our limited partners, are opening those. And if they're not opening them, just reaching out to them personally, just making sure, hey, we just want to make sure you have the updates. We want to make sure you're comfortable, just to actually reach out and have that point of touch. If we would have done that early on, we would have closed that gap. So now it's, okay, we got to watch the metrics. A little extra on our part, but that just ensures that everything is flowing through. So.
Yeah, that's great advice. That's great, to think about, is someone opening it? If they're not, maybe there's a reason. If they invested with you, they're obviously interested, and so why wouldn't they be opening it? That's a great piece of advice for anybody that does marketing, right?
Yeah, exactly. Exactly. Michelle, any last bits of information that you think anyone who wants to, invest passively should understand?
Oh gosh. Great question. I think, I said it before, and this is my personal belief. I like to diversify. I like that I have investments in different arenas, and it's possible that when one is underperforming, i.e. my stocks in the last couple of years, then another one is, still performing. And I've moved money now, I have money in a self-directed IRA. I moved it out of a traditional IRA, put it in a self-directed so I could passively invest with that. And kind of seeing the stock market, decline, that really prompted me to do that. And I think it's having that knowledge too of what are my options. I didn't understand self-directed IRAs. I had actually used money from an old 401k to purchase one of my businesses. So I knew things like that were possible. But I didn't completely understand, how it all worked. And so understanding what your options are is, really important, because I've had people also tell me, well, that's great for you. You have, you make a good income and you're able to invest in that. And I said, no, I'm using a self-directed IRA. This is money that I have already put aside, that's already sitting there, that I'm not happy with the returns on it right now. I'm going to be much happier with it deployed, into real estate. So it's really talking to people and understanding there are options to improve your situation and to diversify that, helps your wealth continue to build, helps the money that you've already worked so hard for continue to build. So.
I love that. I was flying back from looking at an asset in Wisconsin. We were doing some inspection work for a purchase, and all that to say, this gentleman I sat beside, we get into this conversation, and this is the first time that I wasn't leading the conversation on investing. Oftentimes, I love what I do and I believe in the power of it for all people. So he was actually asking me, what do you do? And wow, tell me more about that. And we started talking about, wow, you can roll out your 401k or IRA. You can roll these over. A lot of people don't understand that. Now, there are some loopholes not loopholes. There are some hurdles in some instances. So I have had investors face the hurdle of it's not vested. And so jumping in and doing a little bit of research early on, Conscious Investor will allow you to know what what is the option? What's the potential for me using this resource? Also, remember, you can't touch it. You can completely avoid the tax penalties and utilize your 401k and your retirement accounts. However, you cannot actually touch that money. So there is a third party involved. If you like resources on that, I basically copy and paste. I have like 3 different options that my investors have used, that I've used, and I send that out regularly to, people exploring this option. And so all that to say, if you're interested in that, my email address is down in the bottom, julie@threekeysinvestments.com. I will send it to you. It'll be easy peasy. And you can open up so many options for yourself. More people have the money than they realize to invest. Michelle, you are awesome. I really appreciate having you on the Conscious Investor. I appreciate you as a listener. If you're a listener, maybe you should become a guest also, It's a lot of fun. You've added a lot of perspective and dimension just with your experience. And I really appreciate your time and your willingness to just open up about your journey.
Great. Thank you so much again for having me. This has been so much fun, and it's great to hopefully I've added some value, to your listeners, and I look forward to continuing to learn from you, Julie. So thank you.
Oh, thank you. And, somebody might be resonating there like, wait, how did she do this or that or the other thing? If they want to get in touch with you, what's the best way?
You can find me on social media for sure. I'm on Instagram, Michelle Shriver. And I actually, if you're looking for I don't know, is it called handle or whatever it's called?
Yes. Yeah.
Your name. Yeah. It's like Michelle Shriver, MAK. It's my husband and I's initials, but Facebook is the same, Michelle Shriver, and, MAK. And then LinkedIn is the same. I spend a lot of time on Instagram. I have fun on there. I do reels but while I'm driving, so don't judge, but keep my eyes on the road. It's hands-free. But so yeah, any one of those ways, you can DM me, and I'm happy to connect offline as well. So
love it. Absolutely love it. It's almost like Jerry Seinfeld driving in cars with celebrities or whatever, but yes. You're driving with Michelle, and I like it. I like watching, the content that you're producing. So it's a lot of fun.
Thanks.
Conscious Investor, don't leave information behind. Don't let it just come in one ear and just pass on through. You're here, you're listening for a reason, because you know that you want to take action and do something, whatever that is, right? So I'll tell you what, let's hop on a call. I'm not just the host of I'm a real human being. I always have to remind people of this, who I really like to talk with you and answer your questions. And, it might not be investing in a syndication. It might be investing in something different. So anyhow, let's pop on a phone call. There are links down below. So if you just want to pop on a 20-minute call, let's do that. You want to pop on a 20-minute call to talk about investing in your goals? Let's do that. Okay. You don't and you shouldn't go about this alone. And so utilize the resource of myself and my company. Until next time, live big, love bigger, and do great things. What's the big deal about investing in apartments? Why is it better than investing in a slew of single-family homes? I've compiled a lot of information on why investing in a multifamily, also known as apartments, will help you reach your investment goals. Head over to threekeysinvestments.com and download the Why Invest in Multifamily guide today.